Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.
This week on Wall Street Wrap-Up, the Bureau of Labor Statistics released the November jobs numbers today, and we'll tell you all about it. And the market didn't really like what they saw, and after 3 days of buying, they started selling today. More fallout from the FTX currency exchange collapse with BlockFi exchange filing Chapter 11 bankruptcy, and Sam Bankman-Fried even apologizing for not knowing what was going on. Hi, I'm Andre Labourd. We've got these stories and more. It's Friday, and that means it's time for Wall Street Wrap-Up. Hi, I'm Andre Labourd. Welcome to Wall Street Wrap-Up on this Friday, December the 2nd. Well, for the last couple of weeks, we've been discussing the latest fallout from the cryptocurrency exchange FTX and how its founder, Sam Bankman-Fried, possibly may be a mini Madoff with a fraud of billions of dollars. Well, tonight, we're going to be talking with the man who literally wrote the book on Bernie Madoff. Because coming up tonight, we're going to be talking with Jim Campbell. Jim's the author of the best-selling Madoff Talks. He was also the only reporter to interview both of Bernie Madoff's sons, Andrew and Mark, before their deaths, including his wife, Ruth Madoff, even Bernie Madoff himself before he died in jail. Jim is also the producer of the upcoming 4-part series of his book about Bernie Madoff for Netflix. Now, we'll see how Bernie and Sam Bankman-Fried are alike and maybe how they're not. But first, this morning, the November jobs report was released from the Bureau of Labor Statistics, and it wasn't what the market was expecting. The economy hasn't cooled as the Fed Reserve had hoped, but even gotten hotter than thought, which means more raising of interest rates by the Federal Reserve. In the jobs report today, the employment for November was up 263,000 jobs, which was higher than expected. The average hourly earnings rose 0.6%, while the unemployment rate stayed same as October at 3.7%. And labor force participation rate, they stayed at 62%. The market had a sell-off today, but was regained in the last hour or so before the closing bell. Because the economy is not slowing down, this is probably meaning that the Federal Reserve will have to continue to raise rates higher than had hoped. And where will it stop? Before today's job numbers, Wall Street was hoping that the Federal Reserve would stop at 4.8%. But now with a hotter economy and stronger report today, they know they'll have to continue higher at maybe 5% or even higher. Well, the next Federal Reserve meeting will be on the 13th and 14th of this month, which is the last one of the year. Now, the market was hoping that if the economy was slowing, then possibly they may raise the rates possibly 25 or 50 basis points. But now with the hotter than expected jobs numbers released this morning, it might be 50 or even another 75 basis points, as they've been doing, more likely. Well, where are the jobs? According to November's jobs report, the biggest gains were in leisure and hospitality, rising 88,000, followed by health services and education at 83,000. The slowest, though, was in retail, losing 30,000 jobs for November, which, interesting, going into the Christmas season, you wonder if department stores are going to be hiring as many workers as they were in previous years. Well, as of the close today, the jobs report stalled the rally that was building throughout the week. And the top S&P 500 stocks today were Boeing, Starbucks, and Nucor. The Dow Jones ended the week at 34,428, which was up 0.25% for the week. And the S&P 500, they closed today at 4,071. That was up 1.1% for the week. And the NASDAQ, they ended at 11,461, which was up almost 2.2% for the week. Well, we've been keeping you up to date with Sam Bankman-Fried, and sometimes even referring to him as a mini Madoff. So we thought we'd bring back the guy who literally wrote the book on Bernie Madoff. He's also the producer of the 4-part documentary on Bernie Madoff, coming soon on Netflix. Jim Campbell is his name, and he's here with us tonight. Hi, Jim. Welcome to Wall Street Wrap-Up.
Hey, it's my honor to be back, Andre, and thanks for having me. You nicely had me on when the book came out, and now you've nicely had me on with Netflix documentary coming out. So great to be on your great show.
Do you see similarities between Bernie Madoff and Sam Bankman-Fried?
So it's a great question. I'm calling it is FTX Madoff 2.0, and there are some basic similarities. First off, both of these guys were very effective in building trust. Bernie, as you know, was called the Jewish T-bill, very secure returns. In fact, he manufactured the returns totally, and tremendous trust in an affinity network. 85% of his victims were Jewish. And SBF, as he goes by, very effective at working with politicians and celebrities and millennial folks who are into the technology of blockchain and crypto and playing off that. In a sense, they were both con men to a degree, although neither of them would see themselves that way. Was FTX a Ponzi scheme? A Ponzi scheme, as you know, Andre, is where no real investment activity is going on, but instead returns are being derived from one set of investors and given to another. And that's why Ponzi schemes to survive need more people coming in the front door with new money than are taking redemptions out the back door. Obviously, FTX had real investment activity. On the other hand, the FTT token, that was sort of the quotes currency, appears to be have been artificially stabilized, which is, of course, similarity to faking guaranteed returns, and that was designed due to the conflicted nature of his affiliate, Alameda Research, that was doing wildly risky, illiquid trades that were supported by what FTT tokens were supposed to be as stable collateral. Well, as Bernie's equity scheme was supposed to be correlated to the market and ended up only being 5% correlated, and SBF's crypto token was supposed to be stable as a currency, it's down 96%. I'll tell you where there's some exact similarities. And one of the biggest no nos on Wall Street is not segregating customer assets from firm assets, and even worse, commingling the money. And obviously, what we've learned is SBF moved $10 billion, a big number, of customer money into the Alameda Research, which he also owned, to provide collateral for those risky trades that they were doing. And as we know, Bernie was obviously taking customer money in the Ponzi scheme and using it both as a piggy bank and to prop up his legitimate business. And obviously, one other point on that is the scope was very big. Bernie's was a $65 billion thought to be scam that was that vaporized, and SBF has lost as of now about $3 billion of his investors' money, having moved that over illegally, commingling funds with his personal funds, and really gross self dealing.
It's interesting you bring up about Alameda. And Alameda was the hedge fund that his girlfriend, Carolyn, or Caroline, I'm not sure how she pronounced it, Carolyn ran. Now, there's what for the running of a hedge fund, the SEC says you don't have to have a Series 7 or a Series 63 or a Series 65, but they do say that anything over $100 million, you have to have a comptroller to as a chief controlling officer over 100 million. Well, they easily had over 100 million because, as you were saying, they were moving literally billions of dollars from the FTX into their hedge fund where she was doing the trading. Is that a flagrant violation right there of SEC rules?
Well, the SEC feels that there were securities violations, but the key point here is, Madoff got away with it because the regulators dropped the ball. But in this world, there's no regulator yet. Big red flags, though, in something you mentioned, no financial controls whatsoever at FTX and Alameda.
Mhm.
And as you know, Bernie had a one man accountant in a strip mall who wasn't even licensed to do external auditing. Big red flags. And that leads to another thing. As you'll remember from Madoff talks, the feeder funds, hedge funds that were feeding Bernie's money, their primary value add is to have done due diligence on Bernie and said, yeah, it's real. His returns, we validated them. The assets are there. And of course, Bernie didn't allow any due diligence, and they were essentially bribed by him passing the money manager fees of 2% under assets, 20% of gains, and there's no due diligence done. Well, FTX had huge institutional investors, some of the best known firms you've heard of: Citadel, BlackRock, SoftBank, Sequoia. And basically, they've all had to come forward and say that they did minimal to no due diligence as well.
Would that be opening them up for any kind of civil liability? I'm talking about BlackRock, Sequoia, Citadel, all these that well-known firms that if I, as a private investor, was investing and I was with BlackRock or Sequoia or SoftBank or others, and I would just assume, is the assumption and the problem on me personally, or does that have an opening up for any kind of a cause of action?
That's a good question. One of my pet peeves was that none of the feeder fund guys ended up in jail.
Mm-hmm.
And they're responsible for major losses because their investors were trusting that they had actually done due diligence. And remember that Bernie didn't allow any independent custodians. So no one actually knew that there were no assets backing up all the 65 billion. In fact, Bernie himself told me the most he ever had on deposit at his bank at JP Morgan was $5.9 billion. Now, FTX and Alameda, there's no regulatory regime yet for crypto, so they had no independent custodians. So you have no due diligence and no independent custodians to verify that the assets even existed. To me, that should put them pretty exposed. And by the way, when Bernie confessed to the Ponzi scheme, he was in jail immediately. You'll notice FBF is still walking the streets of the Bahamas. Whether he had criminal intent or just complete incompetence with no controls is up in the air. But commingling customer assets is another word for stealing them.
Right now, do you think it's because of the political cover? I mean, we've got Gary, both his father and his mother are law professors at Stanford, and they were very connected with, I think before Gary Gensler became SEC commissioner, chairman, he also had worked with Sam Bankman-Fried's father, and as well as the last midterm elections, of the about $40 million that Sam Bankman-Fried donated of FTX's money, about 97% of it went toward Democrats, and the other 4% were toward Republicans. They were toward Republicans, but they were all on the financial regulatory committees, knowing good and well he wanted to hedge his bets for favorable treatment.
Yeah, you know something that's similar to Madoff in the sense that Madoff was highly regarded by the regulators. In this case, SBF, I don't want to say paid them off, but he also had on lobbying in his behalf several former SFTC officials. And as you know, the SFTC technically has regulatory authority over crypto. Again, the SEC likes to call itself a cop on the block, on the beat. And as I said in my book, they really do not come in ahead of these collapses. They come in afterwards and clean up the mess. So SBF was very well connected in the Democratic Party. He had said that he was going to give up all of his wealth at some point, very altruistic, and, dressed as a populist in his shorts and bushy hair and everything, and being on stage with President Clinton at one function. Either he was a pretty effective con and was playing this game really effective, or he's incredibly naive and irresponsible with a lot of money.
You've studied, between Bernie Madoff and also now with Sam Bankman-Fried. Do you think that the character of the shorts and the T-shirt, the uncombed hair, looking like he just literally got out of bed, even when he was with a former president for Bill Clinton or former Prime Minister Tony Blair, do you think that was a character that he wanted to interpret of, I'm just the average kind of guy?
Yeah, I call this a little cynically false populism. In the big bad Wall Street institutional. I'm a guy that cares about the people, the little guy. And he just courted so well all these institutional investors who, again, trusted him in the sense that they did no due diligence. How can these top firms just throw money at this guy? And it's because he built up a tremendous amount of trust. And with no controls, with complete conflict of interest, with self dealing, with having his own interest in conflict with that of his firm and his customers by having a FTT token stabilized to support trading of illiquid assets in Alameda. And you remember that's how Lehman Brothers went down, in that they had a lot of illiquid assets was supported by repos, which is overnight money. And as soon as that closed in the market, boom, Lehman went down. And that's what happened overnight in Alameda. And by the way, cascading fallout, BlockFi, which is another one of these crypto exchanges, just declared bankruptcy today. The question is, why is this guy walking the street still in the Bahamas? I mean, his parents and he bought $300 million of real estate in the Bahamas. And, he had a lot of assets, supposedly, but he also had a lot of customer assets, too.
Because he is still in the Bahamas right now, that he has not been extradited, he's not been arrested, and to my understanding, he's not even in a Bahamas jail. He's still living the life of luxury in one of his penthouses. Do you think that's because of political cover, not just because of Washington, D.C., but maybe, I'm sure he's also contributed much to the Bahamas government as well?
Yeah, I think that he's definitely living off some goodwill still, and he's claiming that this was all a sudden collapse, that he could have, in fact, if they'd given him more time, not had to file bankruptcy. I think the Bahamian government is a little bit in contest with U.S. regulators on this, and to me, this is going to get uglier and uglier. There are folks who say, well, there's an innocent explanation and it's just lack of controls and incompetence, and maybe SBF will be able to resurrect himself. But, when you lose billions of dollars and possibly bring down the whole crypto industry, and you look like you've manipulated politicians and regulators alike, that bill may come due at some point. But to be fair, I can't get inside his brain like I could Bernie's to know his intent. Moving $10 billion of customer money to support trades of a firm you own doesn't look very good on the surface.
Did Bernie Madoff start off trying to do good, but his losses got bigger, so he was just trying to keep covering more and more, which then losses got bigger and bigger? Or do you think that when Bernie Madoff started, he started off to do an illegal, fraudulent Ponzi scheme?
Yeah, that's a very good question. And one of the things about SBF and Bernie that would make little sense on the surface, though illegal, is that they both saw trouble coming and they said, we'll do a little bit of a Ponzi scheme, or we'll take customer assets, we'll get the money back, and no one will ever notice. Unfortunately for Bernie, even that wasn't true. And he was building that ethical market-making business that always put customer interests first. But at the same time, inexplicably, in the same mind, he was building the biggest criminal enterprise on Wall Street, which is on that 17th floor of the lipstick building, the Ponzi scheme behind locked doors. So he was actually doing both at once. But getting in trouble and trying to get yourself out of it is a typical way that a Ponzi scheme or a sudden loss would manifest itself. And Bernie tried to tell me that was the story, but it wasn't true in his case.
Author Jim Campbell. He's the author of the book Madoff Talks, and about to be coming soon a Netflix 4-part series on Bernie Madoff. We're going to take a break. Don't go away. We're talking with Jim Campbell, author of Madoff Talks, and also about to be a 4-part series on Netflix about Bernie Madoff. You brought up an interesting point about Lehman Brothers, and I'm curious, and BlockFi, as you just said, rightfully so. This week, BlockFi is filing Chapter 11. There have been others that have filed Chapter 11, and no telling how many more shoes are going to fall in the weeks to come when the auditing starts taking place. Do you see, and I remember back in 1998 or 1999, there was a hedge fund called Long-Term Capital that got into trouble, that they needed bailout from the government. Then, as you just brought up, Lehman Brothers and Bear Stearns, that was about 2008. Washington Mutual went under, not because of fraud, but because of the fact of everything going down. Do you see that this getting so big, I'm talking about FTX getting so big, that the government is going to also have to step in and help bail out creditors?
I don't think there's systemic risk in the what I would call the regular financial system, which is banks, et cetera, and these hedge funds. Crypto is, I would say, at a terrible inflection point. I think the assets are down 2.2 trillion already, and that obviously is very significant and is already cascading through. But it's more likely to mean losses for individuals and losses for those institutions than demise of, say, a bank or a Wall Street firm. It's the same old story that if you don't really know what you're investing in, and everything goes south, that's what happens. And as I said, I could never find anybody that understood Bernie's split strike conversion, and I don't think anybody really understands what the FTT token was and what the real value was, or if crypto is even a store of value at all.
The floor that Bernie Madoff never let any of his sons on, that had all the criminal activity on, was that the 17th floor of the Lipstick Building?
That was the 17th floor in the Lipstick Building in Midtown Manhattan, and the 19th floor was where the legitimate market-making business, which cleared trades for discount brokers like Schwab, et cetera,
that Mark and
all
Andrew
had
were
leading edge technology, top-level graduates, and then down below, obsolete technology and high school grads.
Right. Well, one of the things that you brought up in the book of Madoff Talks was that Bernie purposely, as you just said, high school grad, the people he had employed on the 17th floor, the fraudulent floor, was that he made sure that they didn't know common stock from livestock, but they were running literally millions of dollars through that area. If they find out that FTX and Sam Bankman-Fried has been hiring people that were not security specialists in that field of crypto, do you think that would be a red flag, dead giveaway, that like Bernie, he was purposely keeping people in the dark so he could do fraudulent activity?
I mean, it seemed like a bunch of guys in their shorts and his girlfriend, they were all living in one house even.
And they were living, you're right, they were living together. Yeah.
They were living together, and it certainly doesn't smell very good. And he owns Alameda, and I don't know that he was making that really clear, and obviously that he was collateralizing with his customers' money. And you got to keep asking, were these guys so out of control, no financial controls, no knowledge, that they could do this with a clear conscience? The guy's up there, apologizing for it and saying, I'm sorry. And, I didn't know how much, how did he not know how much money was being transferred to his other company? And
also,
he's either
Jim,
a good liar.
Yeah. And Jim, also with that, he was saying that I'm trying to get other investors in to be able to help finance the losses that have just occurred. Well, I don't know of any investor that would go, oh, you did this? Here, let me write a check right now and to help cover your losses of what you've just done before. So I don't know if it was just delusional of his thought process. Is he really naive?
His own lawyers were trying to get him to sign the bankruptcy papers, and he kept saying, oh, no, I'm going to bring in all this money pretty soon. And as you know, the company Binance was very close to even buying FTX, which would have essentially bailed them out. But they figured out in what looks like a couple of days of due diligence that there were no controls, which again raises all the problem. There's no regulatory oversight. There's none of the institutional investors did due diligence. All these things, Andre, and made up huge red flags all the time that investors are so enamored with the returns that they put blinders on.
Yeah. Jim, when it comes to punishment, and correct me if I'm wrong, I think I think Bernie Madoff, he got 150 years in prison for his fraud. Elizabeth Holmes, just recently, who was the founder and CEO of Theranos, just a couple of weeks ago, she got 11 years. And I'm just thinking, your thought, do you think he's ever going to be arrested? And do you think he's ever going to see trial? And if he does see trial, if he's found guilty, I mean, if Elizabeth Holmes got 11 years, Bernie Madoff got 150 years, I'm curious your thoughts of, will there be any kind of crime and punishment correlation?
I think he's going to go to jail, personally. But, folks know how to play this system, so you never know. And, he hasn't copped to any bad behavior, just incompetence and pleading a lack of knowledge. And it's not very credible on the surface. But remember, he's well wired into Democratic politicians, and he's built himself a good reputation. Bernie, of course, there were a lot of people that didn't think things were kosher with him for a long, long time before. And he only got caught once the tide went out and everybody tried to get their money out. The same thing that happened to SBF.
Jim, so appreciate it. The book is called Madoff Talks. It's a great book. I've read it. In fact, it's about to be coming soon as a Netflix 4-part special where Jim is the producer of it. Jim, I hope you come back with us. Always enjoy.
And Andrea, thanks again. Let me just say that that Netflix 4-part series is directed by Joe Berlinger, who is the #1 true crime documentary director. So I think folks will really enjoy it. And Andre, thanks again for being on your show. Great questions as always.
Thanks a lot, Jim. Well, if you've got a question about finance or a comment about the show, we'd love to hear from you. Make it pithy, make it concise, and write us at Andre@WallStreetWrapUp.info. Now, for a look ahead of market information for next week. But first, what company filed bankruptcy on this day in 2001 and it created the worst accounting scandal in American history? We've got the answer in just a moment. Well, what company filed bankruptcy on this day, today in 2001, and created the worst accounting scandal in U.S. history? Enron Corporation. It was the largest, in fact, it was the 7th largest corporation in the country with a value of over $60 billion, and the stock price went from $80 a share to just 26 cents, just over a quarter a share. Amazing. And it was today. And join us next week when my guest next week is going to be former Congressman and presidential candidate Ron Paul. Now, Dr. Paul served 36 years in Congress. He ran for president twice, and he's never been shy about his feelings about the Federal Reserve, taxes, and the U.S. dollar being taken off the gold standard. That's next week, former Congressman and presidential candidate Dr. Ron Paul. So, as a reminder, we repeat the show on Sunday mornings. Best way, though, set your DVR so you'll never miss an episode. And that's our show for this Friday, December the 2nd, 2022. I hope you enjoyed it. My thanks so much to Jim Campbell for joining us this evening, but always, it's you. We appreciate you for allowing us into your homes tonight. Always remember, follow us on all the social media, on Facebook and YouTube and Twitter and WYES.org. So, enjoy your weekend. Have a productive week as well. Remember, I'll see you next week. If it's Friday, it's Wall Street Wrap-Up. I'm Andre Labour. Remember, money never sleeps. Good night.
Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.